everyone, in today's video we are going to talk about 3 undervalued stocks in such an overvalued market. These are stocks that I either already own or have been tracking because I think they are cheap and have a nice uptrend potential. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out with the algorithm. Also, I have a completely free Discord group chat, which link for that is down in the description below. Alright, so the first stock that I wanted to talk about is a stock within the MJ industry that I have been investing lately. It is a small position of mine, but has been adding little by little as it drops. This stock is TrueLive stock, ticker symbol TCNNF. I have talked about this company before, but TrueLive is mainly the leading medical cannabis company in Florida. It is a vertical integrated company, or seed to sale operations as they call it, in which we already know how beneficial that is for the company. Right now, they dominate 51% of Florida market, but they are also available in other states. They reported a total revenue of $194 million in quarter one, with $90 million in adjusted EBITDA. They have 83 stores in Florida, 2 million square feet cultivation space in Florida, and over 480,000 patients in Florida as well as of quarter one. They mainly focus on medicinal use as Florida has not legalized recreational use yet, even though it is on its way, but TrueLive products are used to alleviate seizures, severe and persistent muscle spasms, pain, nausea, loss of appetite, and many more. But they also have dispensaries in Florida, California, Connecticut, Massachusetts, and Pennsylvania. Even though they are focusing on medicinal use in Florida, they also have edibles, vapes, concentrates, and many more products. TrueLive is certainly a fast expansion company and fast growing company that is looking to continue seeing such a massive growth year over year. For example, they just acquired Harvest in May, which will help them be the most profitable MSO and also will help TrueLive accelerate their national expansion. Because I don't know if I mentioned it before, but the growth of this company is impressive. In 2018, they reported a revenue of $102 million. In 2019, $252 million. And 2020, they had a huge growth and reported $521 million, which means that they have been able to double their revenue year over year since 2017. And I don't know if you noticed, but they are a profitable company, which it is certainly not common within the MJ industry, as most of the companies within the industry are high growth companies just like TrueLive that have huge expenses as the industry is pretty new and they are expanding and are not able to report profit. But TrueLive is not the case. They are a high growth company and they are expanding as well, but they are a profitable company. They reported profits of $63 million in 2020. That is a 12% profit margin, which is huge. Why? Well, because they are expanding every single month, quarter, and year, opening new stores and entering new markets. But they are able to manage their money so well that even though they invest so much money expanding, they are still able to pull profits. How? Because their costs are small. In 2020, they reported $521 million in revenue and cost of goods sold of only $135 million. That is a 74, almost 75% of gross margin, and I think that is huge for such company. It is currently trading at $36.46 per share with a market cap of $6.45 billion. As I said, I am already investing in this company and have been averaging down as it continues to drop, as it is down a little over 30% since its peak on March. Second undervalued stock in this list is a stock that I used to own but not anymore, but I kept tracking it as I like their business and growth, and I wanted to buy again. This stock is Alibaba, ticker symbol BABA. The stock is down over 32% since its peak in October, but the company has continued reporting excellent growth. As you can see, their growth has been exponential year over year and quarter over quarter, since they reported a growth of over 50% in 2020 in comparison to 2019. As obviously, the pandemic accelerated their growth just like any other company within the industry. Yet, the stock has been dropping and dropping since October because of all the issues they have had in China since last year, the antitrust issues, monopoly issues, China drama, and which the company has been working on to fix and making sure to be back to normal. We all know that Alibaba is a huge e-commerce company, but they are also a diversified company. They not only focus on e-commerce, but also on cloud computing, entertainment, autonomous driving, films, fintech, and many, many more that help with their year-over-year growth. Also, ARK Invest, the growth ETF, has been investing a lot lately on Alibaba as well. Right now, Alibaba represents 1.11% of ARK Q ETF because of their self-driving trucks logistic units. They are planning on introducing about 1,000 autonomous delivery robots in China over the next year, which is obviously very innovative. Then, Alibaba represents about 1.40% of ARK F ETF, which is their fintech ETF, and also represents about 1.67% of ARK X ETF because of all their innovative ideas within the company. Right now, it is trading at $215 per share with a market cap of $585 billion and a PE ratio of 25.41, but a forward PE of 18.03, and a beautiful price to sales ratio of 0.82. I do want to say that this is a volatile stock right now because of all the China drama and Chinese companies, but I believe that in the long term, Alibaba stock will be able to see growth like before. And I say Alibaba stock and not Alibaba company because the company is still growing a lot year over year, even though the stock is not. Another undervalued stock for this list that I have been investing is Shift Technology stock, ticker symbol SFT. I have done about 2 videos on this company as I think it has a nice potential. For any of you that may not know, Shift is the new fashion way to buy cars, as it is a company that buys and sells used cars just like Carvana or Vroom, which are Shift competitors. Even though this is an industry not everybody talks about or invests in, it is actually presenting a nice opportunity because of used car shortage and used car market growth expectations, and even more for the online market, as many people today prefer to do everything online, and even more after the pandemic, since most of us prefer to avoid the hassle of going to a car dealership to negotiate the price of the car and everything. So, as this article says, contrary to popular belief, millennials don't hate cars. They hate car dealerships. But the pandemic has pushed car dealers to step up online sales, eliminating what millennials and others dread: showroom visits that average 5 hours, haggling, paperwork, and high-pressure pitches for add-on products like wheel and tire insurance. Statistics have shown that millennials during 2020 bought more cars than any other age group. The thing is that those millennials went entirely online, according to cars.com, and obviously companies like Shift have benefited from that. That is how they were able to triple their revenue in Q1 to $106 million, all the way up from $29.9 million in Q1 2020. If we compare it with its competitors, Vroom currently has a market cap of $5.8 billion, a price to sales ratio of 3.69, and analysts are expecting a growth of 96.7% for this year and 57.80% for 2022. Then Carvana has a market cap of $54.1 billion, price to sales ratio of 8.04, and analysts are expecting a revenue growth of 76% for this year and 34.7% for 2022. Well, if we check Shift, they have a market cap of under $1 billion, $743 million to be exact, the best price to sales ratio of 2.74, and analysts are expecting a way higher growth than the other two. They're expecting a 157.8% for 2021 and 79.5% for 2022. So basically, Shift is the smallest company between the three of them with the higher growth expectations, but the cheapest valuation between Carvana, Shift, and Vroom. So that is why I think that Shift is so undervalued at the moment, and even more in comparison to their competitors. Even though those are the 3 undervalued stocks that I wanted to talk about in today's video, I know there are more excellent deals out there. You know, I always talk about Wish, for example, and I still think it is at an excellent price to invest as well, for example, because of their growth and potential in the long term. Hope you enjoyed the video. Please smash that like button and subscribe since it really helps the channel out. Thank you, and see you next time.